If you've ever looked at a life insurance quote and thought, there is no way I'm paying that every month, you're not alone. Millions of people see the price, assume life insurance is simply too expensive, and decide to go without it. But here's the part most people miss. Sometimes the problem isn't the price of life insurance. It's what they think they need to buy. Before we start the video, hit the like button and subscribe to the channel for more simple, practical videos about money, insurance, and protecting your financial future. Let's be honest, life insurance has a reputation for being expensive. You hear someone mention a policy worth $500,000 or $1 million, and your first thought might be, that must cost a fortune every month. And if you've ever searched for life insurance online, you may have seen quotes that seem surprisingly high. But there's a reason this happens. People often compare the wrong policies, choose more coverage than they actually need, or look at permanent insurance when a simpler type of coverage may fit their situation better. And then they walk away thinking, life insurance is just too expensive. That conclusion can be costly. Because the real question isn't simply, how much does life insurance cost? The better question is, what am I paying for? How much coverage do I actually need? And for how long? Those three questions can completely change the conversation. Let's start with something many people get wrong. Life insurance does not have one standard price. Your premium can depend on your age, health history, tobacco use, coverage amount, policy type, term length, occupation, and other factors considered by the insurer. So when someone tells you life insurance costs $200 a month, that number doesn't tell you very much. A healthy 30-year-old buying a basic term policy could receive a completely different quote from a 55-year-old purchasing permanent coverage. Same product category. Very different risk, very different price. And this is where one of the biggest misunderstandings begins. A lot of people jump straight to whole life or other permanent insurance products because they hear phrases like lifelong protection or cash value. Those features can be useful for certain financial situations, but they also generally make the policy more expensive. Term life insurance works differently. Think of it as buying protection for a specific period of your life. You might choose a 10-year, 20-year, or 30-year term depending on your needs and the policy available to you. For example, imagine you're 32 years old, married, have 2 young children, and still owe money on your mortgage. Your biggest financial risk may not be what happens 60 years from now. It may be what happens to your family if you die while your children are still dependent on your income. There are mortgage payments, childcare, groceries, utilities, college savings, and, most importantly, the income your family depends on every month. That is where term life insurance can make sense for many families. Instead of paying for permanent coverage immediately, you can focus on protecting the years when your financial responsibilities are highest. And that distinction matters because one of the biggest reasons people think life insurance is unaffordable is that they start with the most expensive version of the product. It's like saying cars are too expensive after looking only at luxury SUVs. You might be looking at the wrong category. But there's another problem that makes people hesitate. They think, why should I spend money every month on something I hope I never use? And honestly, that is a fair question. You are paying for protection, not hoping for a payout. Nobody buys homeowners insurance hoping their house burns down. Nobody buys car insurance hoping to get into an accident. The value is knowing there is a financial safety net if something goes seriously wrong. But even after understanding that, there's still one major reason people overestimate the cost of life insurance. They don't know how much coverage they actually need. Someone might hear the phrase, $1 million life insurance policy, and immediately assume they need $1 million. But the number should come from your financial responsibilities, not from a random figure you saw online. Start with the basics. How much income would your family need to replace? How much debt would need to be paid? What would happen to the mortgage? How much would childcare cost? Would your spouse need time away from work? What about education expenses? And what savings or existing insurance coverage do you already have? Once you start looking at the numbers this way, the conversation becomes much more practical. You're no longer asking, "Can I afford life insurance?" You're asking, "How much protection does my family actually need, and what type of policy can provide it without wrecking my monthly budget?" And that brings us to something many people never realize. Sometimes the policy that looks cheap today can become expensive later. And sometimes the policy that looks expensive at first may be solving a completely different financial problem. The difference comes down to what you're actually buying. And that's where the biggest misconception about life insurance begins. The difference comes down to what you're actually buying. And this is where you need to slow down before signing anything. A low monthly premium does not automatically mean you found a great policy. And a high premium does not automatically mean you're being overcharged. You have to look at the coverage, the length of the policy, the guarantees, the exclusions, and what happens to the policy later. For example, imagine someone buys a 20-year term policy because they want affordable protection while their children are growing up. That policy has a specific purpose. But another person may need permanent coverage because of long-term estate planning, a business need, or another financial objective. Comparing those two policies purely by monthly premium would be like comparing a rental apartment with a house and asking which one has the cheaper mortgage. They're designed for different jobs. Now let's talk about another reason people think life insurance is expensive. They underestimate how much their lifestyle costs. Think about your monthly household budget: rent or mortgage, food, electricity, car payments, insurance, school expenses, subscriptions, phone bills, and all the little expenses that seem harmless individually but add up quickly. Now imagine your household loses one income. Suddenly, a family that was comfortable could find itself struggling. That's why life insurance isn't really about replacing your entire lifestyle forever. It's about creating enough financial breathing room for the people left behind. And this is where a simple calculation can be useful. Suppose someone earns $70,000 a year. Over 10 years, that's $700,000 of gross income. Of course, you shouldn't automatically buy a $700,000 policy just because of that number. You also have savings, Social Security considerations, existing coverage, debts, investments, and other resources. But the example shows why a large death benefit can sound expensive while still representing a relatively small monthly cost compared with the financial responsibility it is designed to protect. Now here's another mistake people make. They wait. They say, "I'll buy it when I'm older." It sounds reasonable. After all, you're young, you're healthy, and you have plenty of time. But insurance generally becomes more expensive as you get older, and changes in your health can also affect eligibility and pricing. You don't know what your health will look like 5 or 10 years from now. That's one reason buying coverage earlier can sometimes make financial sense. Not because everyone needs life insurance at 25. They don't. If nobody depends on your income and you have very few financial obligations, your need may be much smaller. But if you have children, a spouse, a mortgage, business obligations, or someone who would financially struggle if you died, waiting deserves a serious second thought. There's another myth worth addressing. I have life insurance through work, so I'm covered. Maybe, but don't assume it. Employer-sponsored life insurance can be valuable, but the amount may not be enough to replace your income and cover your family's obligations. And depending on the plan, coverage may also be connected to your employment. If you change jobs, your situation could change too. That doesn't mean workplace coverage is bad. It means you should understand exactly what you have before deciding you need nothing else. Now let's return to the original question. Why do millions of Americans think life insurance is too expensive? Because they're often looking at the price without understanding the protection. They're comparing permanent policies to term policies. They're buying more coverage than they need. They're waiting until they're older. Or they're assuming their employer coverage solves the entire problem. And there's one more issue. People often shop for life insurance like they're shopping for a television. They find the cheapest number and move on. But this isn't a product where price should be the only consideration. A policy is a contract. You need to understand what happens if you stop paying. You need to understand how long the coverage lasts. You need to understand whether premiums are guaranteed or can change. You need to understand exclusions and limitations. And if the policy includes additional features such as living benefits or riders, you need to understand the qualification rules before assuming those benefits will automatically be available. That's especially important because marketing can make insurance sound much simpler than it really is. You might hear, "This policy protects you while you're alive." Okay, what does that actually mean? Does it provide accelerated death benefits? Under what conditions? How much can potentially be accessed? Does accessing the benefit reduce the remaining death benefit? Are there fees or other consequences? Those are the questions that matter. The same thing applies to cash value. If someone tells you, "This policy builds cash value, so you're basically investing," stop there. Insurance and investing are not the same thing. Cash value can be useful in certain permanent insurance strategies, but you need to understand premiums, policy costs, surrender charges, loan treatment, guarantees, and the actual assumptions behind any illustrations. Don't buy something complicated simply because it sounds sophisticated. Sometimes the simplest solution is the better solution. And that's why term life insurance remains an important option for many people. You pay for protection over a defined period. The premium can be significantly lower than permanent coverage in many situations. And you can focus on the financial years where your family has the greatest exposure. But term insurance isn't automatically perfect either. The policy eventually ends. Depending on the policy, renewal may become much more expensive. And if your financial situation changes, you may need a different strategy later. That's why you shouldn't buy a policy just because someone says it's cheap. You should buy based on the risk you're actually trying to protect. So here's a better way to think about life insurance. Don't start with the premium. Start with the financial disaster you're trying to prevent. If your family would struggle to pay the mortgage without your income, that's a risk. If your children would lose access to the opportunities you've been paying for, that's a risk. If your spouse would suddenly have to cover thousands of dollars in monthly expenses alone, that's a risk. Then ask how much of that risk you can realistically transfer to an insurance company. Maybe the answer is $250,000. Maybe it's $500,000. Maybe it's $1 million. Maybe you don't need coverage right now. There is no universal number. And that's the part people often miss. Life insurance isn't supposed to make your budget uncomfortable just so you can say you have a policy. The goal is to create meaningful protection without creating another financial problem. So before you say, "Life insurance is too expensive," take another look. You might discover that the problem isn't life insurance itself. You might simply be looking at the wrong type of policy, the wrong amount of coverage, or the wrong assumptions about what you actually need. And if you already have a policy, don't just file the paperwork away and forget about it. Know what you own. Know how much coverage you have. Know how long it lasts. Know who the beneficiaries are. And know what happens if your financial situation changes. Because insurance only works when the policy actually matches the life you're trying to protect. This video is for educational purposes only and is not personal financial, legal, tax, or insurance advice. Life insurance costs and policy features vary based on individual circumstances and the insurer. Before purchasing, replacing, or changing a policy, consider speaking with a licensed insurance professional or qualified financial advisor who can review your specific situation. The biggest mistake isn't always paying too much for life insurance. Sometimes it's paying for the wrong coverage. And sometimes, the most expensive policy of all is the one you thought you could afford to go without.